Hello, I'm Grace. The method of calculating preferential interest rates based on credit card spending, which has long been a prerequisite for bank loans, is undergoing a major overhaul. Until now, many financial consumers were required to meet specific credit card spending thresholds just to lower their loan interest rates. According to reports, the existing system maintained a somewhat rigid structure, calculating performance based solely on credit card transaction amounts. As a result, customers who failed to meet these specific benchmarks frequently found themselves excluded from interest rate reduction benefits. The core of this reform is a significant expansion of the qualifying criteria, moving beyond mere credit card spending to include debit card usage and installment payments. Compared to the previous method, the financial burden on consumers to meet these performance requirements is expected to be considerably lower. In particular, the inclusion of installment payments is a measure that actively reflects the consumption patterns of customers purchasing high-priced goods. With debit card spending now included, accessibility is also expected to improve significantly for younger generations who tend to avoid credit card usage. This change also expands consumer choice by including card loan usage in the performance calculation. While the previous method forced specific spending patterns to bolster bank profitability, the new approach accommodates the actual lifestyles of consumers. Consequently, as the calculation method becomes more streamlined, the predictability of interest rate discounts for consumers will also increase. However, it is important to note that the expansion of qualifying criteria does not mean interest rates will drop uniformly for all loan customers. The actual extent of any rate reduction will likely vary depending on the specific preferential conditions set by each bank and individual credit scores. Therefore, rather than simply settling for the fact that the scope has widened, consumers should select banks that align with their specific payment habits. While this move aims to eliminate blind spots in financial services, the specific criteria applied by each bank must be verified individually. Ultimately, under this new system, consumers will need to develop strategies to maximize their preferential interest rates by analyzing their spending patterns through a data-driven approach. I'm Grace, thanks for watching.